the Big Money Podcast. It's your window into outlier stocks and what really moves markets. Don't follow the news. Follow the big money.
Jason, it is the Big Money Podcast. How are you?
It's about time.
I think it's been 2 weeks since we did our last one. We've got some new data to go over, which is going to be really cool, right? The Big Money Index is going lower.
It is.
So we're going to
What does it mean?
We're going to go over what's it mean. That is going to be a bunch of analysis. We're going to go through some really cool charts. You're going to get happy. Love those headphones. I will say that.
I am happy because I'm talking to you. You make me happy.
Awesome. Awesome. So it is March 3rd, 2021. And the market is acting a little crazy. But before we get into the market, we're going to have our outlier segment be an outlier that you and I know rather well, or I think we have studied this person quite often. And that is Daniel Negreanu. Daniel Negreanu, Canadian poker player, mind reader, guy is like top of the class. He is just doing a lot of cool stuff with poker. I'm finding myself even at night watching YouTube videos about Daniel. And I just think that he is, he's just fabulous. You know, I guess whenever you win $40 million.
I was going to say, what makes him an outlier? And I think we wrote something about this a while back. We sort of made an analogy, which you generally don't want to do, right? Gambling in the market, because what we do is not gambling, we invest. However, poker, if I'm not mistaken, it's the only game of skill that is, you know, featured in casinos and whatnot. All other games are games of chance. So you have a chance of winning 50-50 odds or less. Whereas poker, if you know what you're doing and you're good at math in your head, which I think you are, by the way.
A little bit, sure. You too.
You can tilt the odds in your favor of winning. So it becomes a game of skill. So what did we talk about with previous poker winners was how do you win a bracelet? Bracelet is winning a poker tournament. How do you win bracelet after bracelet after bracelet and accumulate literally tens of millions of dollars of winnings over the course of 10, 15, 20 years? That's an outlier, right? It sounds a lot like the outlier stocks or some athletes we talked about. So I was trying to get to what makes him an outlier.
I think there's a lot of things that make him an outlier. One is he is the top of the poker boards. You know, year after year, I think he's won numerous awards, won tons of money. And I think it just goes to show that while for most people, gambling with poker, hold'em, is probably not a fruitful endeavor. However, there are certain people who have figured out the game and edge. Just they know how to exploit edge. And it's not just about knowing the numbers and the ranges of hands that someone can have. It's kind of, I see Daniel doing a lot of cool stuff, you know, and I'm not, you know, Mr. Poker extraordinaire, but it feels like he can read people really well and use that to his advantage, getting little tales about what a person's thinking, what kind of cards they're holding. And I think he puts all that together and he knows when he's got someone beat. Or
he also knows the math, right?
Does know the math. Yeah.
He'll see the cards that he's dealt. He'll calculate the odds of what has already turned up in the deck. He'll calculate the odds visually. So there's a gift, you know, it's not an entirely skill-based thing, but he has the tools to exploit the skill, right? Yeah. And it's kind of a lot like stock picking, isn't it?
It is a lot like stock picking. And I think it makes a lot of sense to focus on the data. That's what people really want to know. They want to hear about what is the map signals data telling us now, because our last blog post we wrote is talking about how the data is changing. The big money index is falling and what that means. And there appears to be a very big sector rotation that is happening. And listen, to some people, it might feel like the sky is falling, but when you look at the data, it really is showing that money is going in certain pockets and going out of others.
Well, that's what I was going to say. I was going to say, let me put my ugly feet in the shoes of a reader here. And I feel like sometimes let's say I'm a reader. Guys, I'm a little confused. What's going on? This data, what's it telling me, Luke? You're saying the big money's going down, the big money index, expect lower prices, but buy great stocks and be bullish. Like, that's confusing to me. So, can you explain that to me?
I'm going to explain that to you, and I'm going to tell you a story that happened to me this past Sunday. And it's going to help, or at least it's going to give you a path of how to go forward whenever the market seems to be working against you. On Sunday, it was snowing. As a good father, I was like, let me take
I'm sorry.
Thank you. While you're in 72-degree weather wearing Umbros, I hear you. It was snowing, and I said, you know what? Let me take my kids outside. Let's go throw some snowballs at each other. And as I was doing that, I was winning. I was definitely the better thrower against my 5 and 3-year-old.
I'm just envisioning you like pelting your kids with snowballs. Like, Dad, we're taking heavy fire.
Everything was going my way until I rolled my left ankle. And I knew it was a bad roll because of the way it is.
That has dad injury written all over it.
So I mean, as I approach 40, I realized that, wow, I need to be careful with the old ankles. And I fell on my butt, and then next thing I know is I start getting pelted with snowballs. And then I have a big decision to make, because I know that something happened with my ankle. And I have to ask myself, I either cut my foot off, or I'm going to have to work a little bit slower until I regain the strength in my foot.
What would you have used? Like a credit card or something like that?
I could have gnawed it off. And so I ended up hobbling back. I was only about 2 blocks away. I got the kids. I was like, listen, Daddy's done. And that whole night, I didn't know if I had broke it or what. Because there's like levels of sprains, right? There's level 1, level 2, level 3. I ended up getting an x-ray. It was level 1, but
you were like level 16.
Level 16, but good thing that I didn't cut it off, because it's still a good foot. It's still a good ankle. And I'm feeling better. There's a little tenderness right now. And anyway, as I was sitting up with my leg elevated, it made me think of the stock market.
Of course.
So often the market is it starts going through some pain. It twists an ankle. And you got to ask yourself, do I cut and run? Or is it going to work itself out? Are we going to have to deal with a little bit of pain before the leg gets back, before the stocks rise again? So that's what I wanted to impress upon you as my ankle is healing. I think that that's what's happening right now with stocks.
I never really envisioned a scenario where your swollen ankle would be an analogy for the stock market, but thank you for bridging that gap, because I think that's what we all needed here.
Listen, I tell my wife, she doesn't listen. I tell her, listen, this is like the stock market, babe. She says, no. She just closes the door. But
so let's dig into that cankle injury for a moment.
Let's do that.
So the big money index has been falling. Now, I think it's important to contextualize our big money index sometimes, because it's easy to look at it and say it's a binary thing. If it goes down, the market goes down. If it goes up, the market's going up.
That's right.
We have to remember that the big money index is composed of buying and selling signals of individual stocks, right? So it is important to take into account what was going on headed into this reduction of the big money index. And basically, what is that? We've seen buying and buying and buying and buying and buying ever since the presidential election. Went straight up.
Buying. Yeah.
And then late January, we got our first hints of selling. We came out there, we told everybody, hey, something going on.
Yep.
You know, sellers have appeared. And just as we're predicting the peak of the market the week of January 25th, because of our data told us, then the next thing we know, literally Robinhood saves the day. And we've talked about this many times. So there was sort of this coordinated private bailout between brokers. And all of a sudden, it stabilized markets and everybody just came and rushed right back in and started buying. So our big money index kind of flatlined and sank a little bit, but didn't really crack.
Yeah.
And then the big money index started to fall, not because there was a huge amount of selling. It started to fall just because there was some selling, right?
It started to fall basically because, number one, there is a tug of war that's happening in our data. And I'm going to show some charts in a second here to kind of drive this all home. But like you said, the big money index has been overbought for this very long period of time. I think it was 60 trading days or something to that effect. The only way that you really can get overbought in our data is if everything is going up, all stocks, right? That means technology stocks, financial stocks, utility stocks, discretionary stocks.
Everything.
And so I think everyone realized that, okay, we were overbought. And only whenever certain sectors, certain areas start to feel a little pressure, can we fall out of overbought. And that's what's happening right now. You've got this tug of war of about 5 sectors that are going up. So they're seeing money going into their stocks. Those are a lot of the reopen names, right? So that's your financials, real estate stocks, industrials come to mind, and also materials off the top of my head.
Discretionary as well.
Discretionary, that's number 5 right there. And then you have your tech stocks are coming under pressure. Healthcare stocks are coming under pressure. Utility stocks are coming under pressure, and staple stocks are coming under pressure. So when you have this dichotomy, let me share my screen. You're going to be able to see a BMI, that's the big money index that is on my screen, start to fall. And so, like I told you a couple of minutes ago, the big money index basically stayed overbought for about 60 trading days. Very, very similar to what we saw post the pandemic sell-off in March. You get overbought and then you stay overbought. And I think that was like 4 months of staying overbought. And so here we had a few months of being overbought. And now let me go ahead and zoom in real quick so you guys can see we are actually below overbought. And that's something that we've been waiting on. We wanted to see this BMI start to fall because typically when it starts to fall, markets tend to fall with it. But what we're seeing right now, Jason, some markets are falling, some markets are going up. Okay, some sectors are going up, some sectors are going down. And a really cool way to see that is look at what actually determines the flow of the big money index. And that's going to be these daily buys and sell signals. Okay, green bars, big buying, red bars is selling. So up here, you see a lot of big green. That's financials, industrials, materials, REITs, energy stocks too. Jason loves energy stocks. And then what's been getting sold? Healthcare stocks, a lot of healthcare stocks, a lot of technology stocks, and also staples. So whenever you have this dichotomy, you got this tug of war, this pull and this push, you start to see the big money index start to fall. And we're seeing the same type of activity in ETFs. So again, big green, that's big buying in ETFs. Typically that's around peaks, not always, but typically kind of aligns with the peak here. This is the S&P 500. Same thing here. And then right here, what do we see? We see a bunch of ETF selling, which, by the way, there are some equities being sold, but it's also bond ETFs. So bond proxies, as interest rates go higher, they are under pressure. So
I think it's also interesting that, at least on that chart, ETF selling, when moderate or even small, tends to line up with the troughs.
Yes, that is true. So typically, you know, when you got big selling, lows are near. That's pandemic selling. Don't expect that anytime soon. And then you see, yeah, big ETF sell sticks. That was the low here. That was the low here in the market. So if you kind of look at this setup, like Jason's talking about, you tend to get these big red sticks followed by small red sticks. And then we're up and away is usually what happens. So let me go ahead and unshare for a second.
Now, I just want to add one last thing is that
Yes.
chart showed about a year of data. And we can do this for another time, but if you were to look at a chart of buy signals versus sell signals over a longer period of time, you would see that it is not usually all green or all red. It's just been an unusual 12 months because when you get to extreme points in the market, so if we rewind, you know, conceptually to January of last year before the pandemic, there was lots of buying, but there was some selling. It was kind of almost exclusively green, but there was some red. You could see it. Maybe not on that chart because that actually is the net buys and sells, but you could actually see maybe you'd have 80 buys and 5 sells, or 100 buys and 15 sells. For the last 4 months, with the exception of late January, we were seeing 145 buys and 2 sells. So literally an absolute absence of selling. Post-pandemic, we saw the same thing. So we've had rather extreme buying. And that's what I was talking about, why it's important to contextualize that big money index coming into when it sinks, because you can have a big money index that's overbought with a small amount of selling still if the buying is huge enough. But really, we've had a period of unrelenting buying since basically March lows of last year, with the exception of the election, which we talked about in our election study, and the exception of a really small patch at the end of January, which was like days. You had to, I mean, if you were busy, like watching a Netflix show, you missed it. It was just so fast. And that is what we need to be wary of too. If this BMI continues to be sub 80%, which is overbought, it might only be a few days because that underlying bid has been so strong. But right now, to Luke's point, to your point, the money's moving from one side of the room to the other. So it's coming out of the growth in tech and healthcare, and it's moving into the reopen stuff. So it's not a straight selling of everything, right?
It's not. And I know Thursday was a big risk off day. I think the markets were down somewhere around 3%, 4%, maybe for the NASDAQ at some point. Those could be good opportunities for those that are patient, that are looking for certain levels to pick up stocks. You know, even when the waves are getting sloshy, you know, you can still dip your toes in, I believe, on high quality outliers. So
absolutely. And to your point, that's why when things can feel frustrating, right? Markets plummeting, you go buy some stocks, or you're getting ready to buy stocks because you think it's going to crack and head lower. Like, this is it. The big money index is falling. Markets puked 3%. All right, I'm getting ready. come to Papa, right? And then you wake up Monday morning, stimulus is passed, and the NASDAQ's up 303 basis points, 3%. You're like, what? It's over? And then the next day, the market's down, 1.5%. Next day, we're up. It's that we're in a period of volatility right now, but it's not straight risk off. It's money moving around, rotating. That can be a frustrating environment. But to your point, how do we get around that?
Well, you have to start asking yourself, where are we going? And are we in a bull market, or has a bear market started, right? That's really got to be your question. It's got to be your framework. And I'm not convinced that, this is going to be a big sell-off at all. In fact, I think it's kind of like a level 1 ankle sprain. And so I'm thinking that using this pullback as
but you were crying during your level 1 ankle sprain.
Listen, I was tearing up, and listen, if it's kind of like, stocks have to breathe sometimes, right? And things happen, and it's just like stocks. And I made this chart here before we started, and that's an outlier chart. And
unfortunately for me, the word outlier is backwards, but I think everybody knows what it means.
Is it?
It's
backwards?
Almost like a mirror image. It's weird. It must be the way the camera is. It's funny.
But I wrote it backwards.
There you go. Then it's forwards.
Because all right.
It's funny. Sorry, did I interrupt you?
No, I'm dying laughing. I am dying laughing. Yeah. I honestly, so the question is, what are you going to do, right? What are you going to sit and do with your stocks? Are you going to sit here? Are you going to worry? Or are you going to be looking for stocks that are on sale? And looking at this backwards chart, hopefully what you can pick up from the chart.
Looks like a stock going straight down from where I'm sitting. It's supposed to be going straight up.
Is it really going down?
Yeah. Yes.
All right.
So it'll transition to.
So we've actually fixed the chart. So the chart was backwards, which is hilarious.
I'm amazed that you were able to write the word outlier backwards so it appears forwards for the rest of us. Good job.
Listen,
good job.
All I wanted to do was do it backwards so that you could actually see it.
You were testing if I was paying attention.
I was testing to see if you could pay attention. But ultimately, this chart behind kind of looks like some of the stock signals that we have. Okay. So what do you have? You've got this stock that's got this uptrend. You've got these, blue bars, which are our green bars. And then you get these little periods where there could be some selling. And I've drawn an arrow there because that's what I have learned over time, is to be looking for outlier stocks that are on sale. And so you can use sell-offs, like right now, twisted ankles for stocks to actually buy them. And so the stock that we're going to be talking about today that you and I have owned for a number of years is Chipotle Mexican Grill. And so here's the chart right here. And these green bars, these are every time that the stock was actually a top 20 stock for map signals. And if anybody remembers, there was the big E. coli scare, right? It wasn't fun. The stock was going lower. It was scary, but there were a lot of people who could see that clearly that is something that can be fixed. And so this period here of decline could have been a great opportunity to actually pick up shares on sale if you believe that the stock was actually going to get righted eventually.
I think you did go out and buy some for us right around 387, if I'm not mistaken.
Something sub 400. I think there were multiple entries.
And the reason I'm bringing that up is because that period was a multi-year period of perceived pain. And it was, and we had pain in that stock, right?
Yeah.
We were down maybe 40% or more at some point.
Yep.
But then look what happens when the ship gets righted and it resumes its outlier track.
Yeah, no, that's exactly right. And I think that ultimately a lot of, new investors, they fail to realize that sell-offs tend to be temporary. They tend to be shocks in the system. And what they fail to realize, and it takes years to really understand this, and believe me, I'm still learning to this day, but great stocks continue to be great. Great poker players generally continue to win year after year. Now, there will be periods where they get hurt. They got to slow down. They've got to right the ship. And if you can get a great company that historically has these big money signals that we have here, whenever these patches of volatility come, you really can feel more confident that, this is going to be a name that's going to bounce back ferociously.
Yeah, I think it's a great point. What do we do? Because some people get scared when they see a red signal in our chart. We do have another chart that's a 1-year chart that just shows big money buying and selling. That last chart was every time it appeared on our 20 buy report. So if within a year you see, hey, what's that red? Should I sell? If it's an outlier stock, if we have done the hard work for you, filtered through 5,500 stocks and picked the 20 best, and there's sudden selling on some of those.
I'm showing my screen right now.
Yeah.
Which is
so right
red.
there, that might actually be an indication to buy. Now, it's not going to work every time. We're not going to win every poker hand in every poker game. But that was pain. That was brutal. That was a major drawdown. But look what happened on that snapback. So this is an outlier. I'm sure Daniel Negreanu lost several games in a row, several tournaments in a row, go on a skid. It happens. But the way around pressure overall is to, stick with the outliers, stick with the game.
I think he sticks with his system, right? You can see sometimes you'll watch him play. He still is going to use statistics on his side. He still knows that if he keeps playing and doing what he does over time, he's going to win. Some people that he plays against are just going to get the best cards. They're going to get the best flops. And he knows that he can outskill them. So he can just keep playing. Eventually, they're going to, misread some stuff. And then he's going to be able to do what he always does. And that is come out on top eventually. So
yeah, so take me home here, Luke. Take it all home. The market today is having a rotation day. As I'm looking right now, the NASDAQ is down about 170 bips. The Qs are down 1.7%. The SPYs are down only 0.5%. The Diamonds, which is Dow Jones, up small, and the IWM, which is the small cap Russell, is up 0.5%. So growth stocks are under attack. Those are stocks we popularly traffic in.
Yeah.
Growth is down, reopen is up. So what do I do with this BMI data? BMI's headed lower, expect lower prices. Okay, lower prices are coming. But like you said, Luke, they're only coming in some markets and not all markets. So what do I do?
Listen, it depends on what you're trying to achieve. Number one is there are stocks that are going up, just like you're talking about. And we're showcasing those in our research, right? So those top 20 lists are going to be like the highest quality names that are actually going up. And I just went over, and you went over, a number of sectors that are seeing continual buy pressure: financials, energy. There are leaders in those sectors. There are just the best of the best that are growing their earnings, growing their sales. And the big money, most importantly, is flowing into them. And then you have a lot of these names that were the work from home trade, right? They're under pressure. Wall Street's a little worried about, are their growth rates going to slow? And for a number of them, there are. But I think what we're trying to do, especially at map signals is to focus on which ones are actually leading the change for the next few years, the next 5 years, 10 years. The way people communicate, the way people consume content, the way people pay, all of that stuff. That is what's transforming basically every single day under the surface of the market. And so while there may be a sector rotation that we're seeing, I think you use these opportunities, these sell-offs, as ways to time your entry. I just said it. I know.
Yeah, you're just reminding me about Tesla, which we hold a long position in that stock
right
for
there,
disclosure. Yeah. I remember we were sitting back on the trading desk. I think we were at Jefferies. It was around 2012 or 13. The stock was hot. And then all of a sudden, some headline would come out that it got in a crash, a Tesla Model S, and the battery caught fire, and it was some horrible disaster. And the stock would tank, 10, 15%. And everyone's like, oh, it's over. Those cars are unsafe. Meanwhile, they get the #1 consumer reports, safety ratings. They're selling, they're growing ever closer to popularity, ever closer to profitability at the time. Couldn't get the word out. And it was an opportune time to buy, but we might have been seeing a momentary sell signal in our data.
Yep.
But what's important is it's an outlier company. That car, whether you love it or hate it, it's changing the way people view electric cars, how they drive. It is a game changer.
Companies are following suit. A lot of the old world companies, the Fords, the GMs, they're all having plans to go electric, and that's because they're seeing the success. They're seeing that society is changing its tune of what they want in an automobile. And quite honestly, it saves the planet too.
And Chipotle makes great burritos. You clearly love a good burrito.
I remember the first time I went to Chipotle and I knew it was a hit, and I bought the stock soon after, but I made a big mistake when I was young. I think it was probably 23, 24, just moved to New York.
You sold it for like a 20% gain or something.
I bought the stock or a call option. It was like a 55 strike call in Chipotle. So it was like a little bit out of the money. I remember that I made maybe 10% on the stock. Maybe it went to 60, something like that. Took my money and ran. And that was a boneheaded decision, because had I held that one, I would be sitting kind of pretty right now. So, but you got to learn that stuff. And I'm sure there's a lot of people that'll be watching this. I know we've got 38 YouTube followers, Jason. So, 2 of those being one me and one is you. So
I'm your biggest fan, if that helps.
You are my biggest fan, but seriously, I mean, that's the thing. And just like whenever we purchased Tesla and we held it for years and it didn't really do much, and now it is an umpteen bagger. I'm not even sure, because the stock moves around so much. But the fact of the matter is, your basis is so low whenever you catch these outliers early on that, even if the stock's down 5, 10, 15%, doesn't really matter. It's not going to make an impact on what we're trying to do.
And I think, look, to wrap it all up, the big money index is a great indicator. Some people use it as a trading indicator, trying to time market tops and bottoms. Some people use it as a risk indicator. We use it as a gauge to understand money flows in and out, when might be opportune, because we're mostly long guys, right? We're looking for outlier stocks at favorable prices. You can use the data many different ways. We believe in being long-term investors and looking for the long game. That is how we use it. So a tinge to our narrative is always going to be like, there's going to be a sell-off. Don't get too bearish, because, there's a bullish undertone.
This is a bull market, my friend. Don't forget. So, rotations are going to happen. We had them before the election, big rotation. After the election, big rotation. And we're having another one right now. So this is very typical.
The ankle twister.
Yeah. And, listen, maybe it's a level 2, maybe it's a level 3. I think it's going to be more level 1 because it's not a full risk off. And maybe by the time we speak again, there'll be some, there'll definitely be some more data that comes in, but maybe we'll be able to quantify and then get closer to a potential bottom that we can then showcase what we're looking at in our data. That's going to help us identify when we're off to the races again.
Well, I think that about sums it all up. I actually have a poker game tonight, so wish me luck. I don't think I'm going to have Negreanu style results, but hey, one never knows.
Listen, I wish you luck, but I also wish you, I don't want to wish you luck. I want you to use your statistics. I want you to be thinking in terms of the range of hands that people against you are having,
Diamond hands.
Diamond hands. That's what you need to have. So cool. Well, this was fun. Again, you know what I forgot? I forgot to tell people to follow our YouTube channel and also to like us wherever you consume your podcasts, audio. So Apple, Google, Spotify. We need the love.
Need the love. Bring you the content. If you have questions or comments or even suggestions, definitely let us know. And until then, don't follow the news.
Follow the big money, because that's how you make money over the long term.
That's right. That's right. But don't get spooked out if the big money shows they're getting out of an outlier stock, because maybe they're taking a 10-bag profit.
With that, we'll see you next time, my man.
Peace.
Peace.
Bye.
Bye.
Thanks for tuning in. And please remember, this broadcast is intended for entertainment purposes only. Investments can carry substantial risks. Before you make a financial decision, you should first consult your financial advisor.